How does the SALT cap limit property tax deductions? Have you ever wondered how the state and local tax cap affects your property tax deductions? Let's break it down in a simple way. The state and local tax cap, often referred to as the SALT cap, limits how much you can deduct from your federal taxable income when you itemize your deductions. This includes property taxes, which can be a big part of your overall tax bill. As of the year 2025, the SALT deduction cap is set at $40,000 for individuals and married couples filing jointly. This means that even if you pay more than $40,000 in combined state and local taxes, including property taxes, you can only deduct up to that cap amount on your federal return. Before the year 2025, the SALT cap was $10,000, a limit that was introduced by the Tax Cuts and Jobs Act in 2017. This change hit taxpayers in high-tax states especially hard, as many of them pay significant property tax bills. The goal of this cap was to increase federal revenue by limiting the deductions that were previously allowed without any restrictions. For those who itemize deductions, the SALT cap can be a real challenge. If you have high property tax payments, you might find that you cannot fully offset your federal taxable income. This limitation can lead to a higher overall federal tax bill. On the other hand, if your property tax payments are lower or if you opt for the standard deduction, the SALT cap may not impact you much at all. Another important aspect to consider is that the SALT cap phases down for individuals with very high incomes, specifically those earning over $500,000. For these high earners, the allowable deduction decreases by 30 cents for every dollar they earn above that threshold. This effectively lowers the cap for them even further. From a property tax management perspective, the SALT cap means that keeping accurate records of your property tax payments is essential. You want to ensure that you claim the correct amount when itemizing your deductions. It is also wise to consider whether itemizing your deductions is worth it compared to taking the standard deduction, especially with the SALT cap in play. Some taxpayers may look for state-level workarounds, such as paying state and local taxes at the entity level for pass-through entities. This could help mitigate the cap's impact for certain individuals. Additionally, planning your tax payments strategically can help you maximize your benefits within the constraints of the SALT cap. In essence, the SALT cap limits how much you can deduct for property taxes by capping the total deductible state and local taxes at $40,000 starting in the year 2025. This cap significantly influences how taxpayers manage their property tax records and deductions to maximize their savings.